you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA is the one you adore. Later CPA and Associates, accounting done great by mates. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA is the one you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA is the one you adore. Later CPA and Associates, accounting done great by mates. Your tax needs and more, Later CPA is the one you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA is the one you adore. Later CPA and Associates, accounting done great by mates. Later CPA and Associates, accounting done great by mates. Later CPA, Later CPA, Later CPA and Associates. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, your tax needs and more, Later CPA is the one you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA is the one you adore. Later CPA and Associates, accounting done great by mates. Later CPA and Associates, accounting done great by mates. For all your tax needs needs and more. Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. Later CPA and Associates, accounting done great by mates. Later CPA, later CPA, later CPA and Associates. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, for all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. your tax needs and more. Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. Later CPA and Associates, accounting done great by mates. Later CPA, later CPA, later CPA and Associates. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, your tax needs and more, Later CPA's the one.
Hi there, I'm Daniel Later, founder of Later CPA and Associates, and welcome back to our ongoing series, Building a Successful Private Practice from Beginning to Infinity. Now, I went to my therapist and my accountant on the same day. The therapist said, "You need to let go of your past." The accountant said, "You need to carry forward your losses." And I just sat there thinking, great, I've been doing the exact same thing for different reasons. Okay, let's go ahead and jump into our topic this week. The topic is understanding the tax implications of expanding into multiple states. So let's go ahead and talk about that. Now, as your private practice grows, you might start seeing clients in other states, whether virtually or by opening a second location. But expanding across state lines brings a new layer of complexity to your taxes. The goal today is to help you understand when and how multi-state taxes come into play, so you can avoid unexpected surprises and stay compliant. So why does this topic matter? Well, with the expansion of the various compacts for the mental health profession, barriers between the states have been lowered. So it's easier to move across states now. And many therapists assume they only owe taxes in their home state, even when seeing out-of-state clients. Now, each state has its own tax rules, and some are more aggressive about claiming income than others. Also, this matters because understanding your obligations early helps you avoid penalties and double taxation. We never want double taxation. It exists, so we want to reduce it where we can. Now, I want to cover some key concepts with you. These will be important, and you might have heard these words before. First, the state nexus. Nexus means that your business has sufficient connection to that state to require tax registration. We're talking about states other than your home state. Now, you can create nexus in another state by having clients in another state, generally over telehealth, or by hiring employees in another state. Sometimes remote employees can trigger this. Or, of course, the obvious one, when you open another physical location in another state. Those things can create nexus with another state. Now, each state defines their nexus differently, so always check on those specific rules. But generally, those three things, a telehealth client, a remote employee, or a new physical location, those generally always trigger nexus in a state. But again, check the details. Every state has different rules. Another concept to talk about is your income tax obligation. Once your nexus is established in another state, you may owe that state income tax on income that's earned from that state. Now, states will typically apportion the income of your business. That's dividing the income and dividing the taxable income portion of your state by a factor. Now, this gets a little complicated, so I'm not going to talk about it here. But basically, apportionment is each state using their own method, their own calculation to decide how much of the business's total business income goes to that state. That's all I'm going to say here. Now, if your home state and another state both want to tax the same income, then if your home state and another state, they both want to tax the same income, potentially being a double tax, you can usually claim a credit on your home state for the taxes paid to that other state to avoid double taxation. Now, all the states also have a different method of calculating this. They're not perfect. We're not avoiding completely double taxation, but we're doing a big giant step towards reducing it significantly. Now, there's other taxes out there besides income tax. Sales tax is a big one. Now, most states do not have a sales tax on services like mental health counseling. Some states do. But there's also states that have different names for different kinds of taxes. In my mind, they're all a sales tax, but they call them different things and calculate them slightly different ways, so they're not technically sales taxes anymore. But you can have states that have something like a business privilege tax, or a franchise tax, like in California, or a gross receipts tax, or they can come up with other different kinds of names. Again, they're super similar to a sales tax, but not quite the exact same thing, so they're not technically a sales tax. So keep that in mind. There's other local taxes that might come into play too. Now let's talk about payroll taxes. If you're hiring someone who lives in another state, you need to register for payroll taxes in that other state, even states that might have zero income tax. They'll still have things like unemployment insurance tax or some other kind of tax that they tack on there as well. So if you have an employee in another state, register with that state too. Keep that in mind. And also use payroll software and a CPA to make sure you're compliant on everything. I come across clients who operate in multiple states regularly who just went with the simple explanation and did not register in a state because it had no income tax, and they thought no income tax, no payroll taxes. A super easy mistake, an honest mistake, something that's really not too hard to fix either, but it is still something that needs to be fixed. So payroll taxes, that's something to consider. Now also, we've talked a lot in the past about your business's structure. LLC, sole proprietor, S corporation, sometimes C corporation, all those different structures. Businesses with a specific structure that are operating in more than one state might need to register that type of structure in a state. Now, if you're operating in multiple states, you already need to register in another state as a foreign entity for the state. So if you live in Illinois, if your business is in Illinois, but you have activity in Ohio, you need to register in Ohio as a foreign entity. I know it doesn't make too much sense, but that's the wording they use. And sometimes there's annual fees that need to be paid to the state for registering with them. When you're an S corporation, you need to pay attention to other states' rules about being an S corporation. They exist. That's something to be aware of. We're not going to go into details because that's going down a rabbit hole. So those are the things to consider. Now, I have some practical tips to give you as well. First off, track your income by client location. That will simplify things a lot. If your practice operates in 2 states, in 4 states, in 10 states, be able to track the location where your clients are, especially if you're taking on remote clients, which is getting very common nowadays. Your EHR software might have the ability to help you with this. If not, you'll need to look at other sources, other ways to separate that income. Confirm your state's telehealth rules for licensing and tax. Make sure you know what the rules are so you don't break them. Use your CPA and review each state's nexus exposure regularly. If you see one client out of one state that is not aggressive about taxes, then you might be underneath the nexus rules and not need to report in that state. But if you see 20 clients in a state that is aggressive, California, New York, something like that, then you'll want to make sure that you're aware of the nexus rules. Don't let that one slide. And keep good records about where your revenue is sourced. Again, where your clients live. Now, a couple closing thoughts before we go. First, expanding your practice across state lines is a great sign of growth. And with the increase in the compacts, it's becoming more and more common. But it also means playing by multiple sets of rules. Understanding where your business lives for tax purposes will help you grow with confidence and stay compliant everywhere that you serve your clients. Critical thinking question for you to think about. If your practice starts seeing clients from 2 or 3 new states next year, how would you track and determine where your income should be reported for tax purposes? Think about how that fits into your own practice. Now, if you have any questions about this topic, go ahead and DM me, message me, email me, whatever you'd like to. Go ahead and ask me your question. I'm happy to answer those and get you answers in a reasonable time. If you would like to schedule a free discovery call with my firm, with myself or someone else, go ahead and DM me and we'll send you a calendar link. And we can get that scheduled, and we could talk about the business strategies for your business and yourself. Follow, subscribe, like for future tax tips and event notifications like this one, and visit our website, latercpa.com. I will see you all on the next video. Have a great weekend. Keep helping others to help themselves, and let us help you so that you can keep doing just that. Bye.
For all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. Later CPA and Associates, accounting done great by mates.